Money is difficult to earn, so it is natural that we want to keep it safe and protected. But putting all our money in a bank account has hidden risks that most of us are not aware. That is what Jack found out. When Jack was in college, he could buy many things with a $10 bill. He could buy 10 beers at the college party, he could buy 2 books from the store, or he could have a pizza and a soda for lunch. But 10 years later, with the same $10, Jack can only buy 5 beers, a simple book, or the cheapest pizza. Why is that? Why are things getting more expensive over the years? This is caused by something called inflation. Inflation happens when there is a general rise of prices, and because of that, the same amount of money cannot afford the same things. In America, the average inflation rate is around 2% a year. This means that every year most things rise their price a little bit. 2% might seem insignificant, but when that happens consistently over the years, it builds up and makes a huge difference. It is even worse when in some years there is a bigger inflation rate, like the one we are facing. This year inflation rate in the US is already more than 8%, which means that your $1,000 are still $1,000. But for each 1,000 beers you could buy last year, you can now only buy 920. Your money might be safe in the bank, but your purchasing power is not. What scared Jack was that he had $10,000 saved in his bank account. So, this meant his purchasing power has been decreasing year after year after year. And if he doesn't do anything, it will continue. So, what can Jack do to protect his money? Jack met with an old friend from college, Michael, and asked for advice. Michael said that the best way to protect from inflation is to have assets, things that can be traded or generate money. In other words, to invest. Jack quickly shared he knew nothing about investments and that he hated risk. He's the guy that is afraid to lose even a dollar. Michael then explained, investments have risk, but by having your money in a bank, aren't you already losing to inflation? Investments aren't something only for specialists or rich guys. It is something anyone should do because everyone is exposed to inflation and everyone should have the opportunity to increase their wealth. Besides, there are a couple of really simple strategies anyone can follow. Jack recognized it made sense. Let's go for it. When investing, usually the higher the risk, the higher the reward. Your goal is not to double your money in 1 year, but to protect it from inflation. So you will probably choose a low-risk strategy. You are looking for assets that consistently grow over time. You don't want to spend time researching for the next big thing, and you don't want to depend on luck. Having that in mind, here are a few good options. I will first show you what you can buy, and later I will show you how you can buy it. Gold has been an historical asset for many years. You can either buy physical gold or a share of it on a trading app. Its price regularly rises over the years, so it is a safe way to save our money. Company stocks, which means buying a piece of a company. You can either buy stocks from individual companies or you can buy a group of them, as I will show you next. Houses that can, for example, rent. To invest in a house, you usually need a good amount of money and you may even need a loan. But it can be one of the best investments, although it needs to be carefully planned. Cryptocurrencies, a riskier asset because of its volatility and unpredictability, but may be a great asset for the future. It is becoming more and more popular, so having some for the future can be a good way to increase your wealth. There are different assets beside these ones, but these are my favorite. Before you start buying assets, let me share 3 golden rules. First, when investing, diversification is key. Let's consider an example where you invested all your money in Bitcoin, the most famous cryptocurrency. This may not go well, because Bitcoin may be the biggest now, but if for some reason it loses interest, you will take a big hit. How to avoid this would be to select different crypto that also have a good potential and have your investment money shared among them. This way, even if one of them goes down for some reason, the others may hold or even rise. But what if cryptos start going down because Elon Musk decided to tweet about it? Your entire investment will go down. Maybe not forever, but for a while. A good way to protect yourself could be if a third of your investment was in gold, other third in stocks, and the last third in crypto. This way, cryptos may go down, but stocks and gold may be looking good and bring your investments up. Always diversify and avoid placing too much money in higher risk assets. The same is true for stocks. Avoid investing in only one company. Diversify. And one of the safest ways of investment in stocks is the S&P 500. The S&P 500 is basically a way to invest in the best 500 companies in the American market. This way, you are not vulnerable to one or another going down, but relying on the overall market that in its history has an average growth of 10% a year. The second golden rule is to invest regularly. It is safer to invest $1,000 a month than $12,000 at the same time. This is because prices go up and down all the time, and by buying regularly regarding the price, you make sure to have an average price. You will not only become more comfortable when the prices go down, because you prefer to buy low, but you will also be confident that quickly you will be having profit again. The last golden rule is to invest only what you don't need. You should always have an emergency fund with at least 3 to 6 months worth of your expenses. If you want to have a big purchase, for example a car or a house, you should also not invest that money. Other than that, put aside a slice of your income to invest regularly in a group of assets you feel comfortable. If you have money saved already and want to invest part of it, split it into 24 months, don't invest all at once. There are many platforms to buy stocks, gold and cryptos. The ones that I use are Trading 212 for stocks and gold and Coinbase for cryptos. I will put the links in the description, and if you use them, you will be supporting my channel, so thank you for that. When investing, we want to create profit and wealth in the long run, and we should not worry if prices go down and we are losing money in the short run. You only lose if you sell. So, invest regularly, diversify and hold. Take that, inflation! Check out my next video where I share 5 principles I'm following to become rich. Thank you for watching, see you on the next video.